Exercise 4.5. Umbro manufactures at the business where rugby jerseys are manufactured and sold. The below information relates to the production in their factory. Required. 4.5.1, we've got to prepare the factory overheads notes. 4.5.2, we've got to calculate the direct material cost. And 4.5.3, we have to calculate the direct labor cost on 28 February 2025. Information 1, balances taken from the general ledger. They give us the opening balances and closing balances for raw materials inventory, work in progress, and indirect materials, and then only the opening balance of our finished goods. We'll need to calculate the closing balance. Information 2, transactions during the financial year ending 28 February 2025 for the purchases of raw materials, purchases of indirect materials, delivery fees on purchases of raw materials, advertisements, rental expense, and depreciation on our factory equipment and our delivery vehicle. 3 additional information. A, the bookkeeper forgot to record an invoice of 112,500 Rand for raw materials. Trade discount of 20% was received from this purchase. B, 2/3 of the indirect materials are used in the factory. C, salaries and wages. Salary of the factory foreman is 192,000 Rand. Earnings by factory workers are shown in the below summary of the wages journal. Their pay as you earn, UIF and pension, and what the employer contributes and the net wage. An amount as seen as part of factory wages. Indirect wages, there's 5 temporary employees that clean the factory at 120 Rand per hour. They each work 145 hours normal time. 3 of the employees each worked 30 hours overtime at the normal tariff plus 60%. D, rental expense includes the rent for March 2025. There was no increase in the rental for the financial year. Rental is apportioned between the departments in accordance with the floor space occupied. Factory 200 square meters, administrative office 80 square meters, and sales division 120 square meters. 4.5.1, prepare the factory overheads note on 28 February 2025. So firstly, you write down your format. It's going to be indirect material cost, your salary of your factory foreman, your wages of factory foreman, your rental expense, and any depreciation. For indirect material cost, we're going to look at our opening stock, we're going to add our purchases, and we're going to minus our closing inventory for indirect materials. And then if we read further in information 3B, 2/3 of the indirect materials are used in the factory. So then to do the calculation, our opening balance is 6,100. We purchased 18,500 Rand, and then our closing balance, which we made a minus, is 7,200. And then we times that figure by 2/3 because 2/3 goes to the factory overheads. If we do the calculation, 11,600 Rand will then be your indirect material cost. The salary of the factory foreman was given as 192,000 Rand. Then wages of factory foreman, if we go back to the information, earnings by factory workers are shown in the below summary of the wages journal. Their deductions for pay as you earn 120,000, UIF 8,400, pension 32,600. Total deductions 161,000 Rand. The employer contribution 74,000, and the net wage 720,000 Rand. Amount is seen as part of factory wages. Indirect wages. 5 temporary employees clean the factory at 120 Rand per hour. They work 145 hours normal time each. 3 of the employees worked 30 hours each, overtime at the normal tariff plus 60%. So this would form part of your factory overheads. So if we do the calculation, our overtime rates will be 120 Rand times 1.6 to give you 192 Rand per hour for overtime. So 5 workers worked 145 hours each at 120 Rand per hour, and 3 workers worked at an overtime rate of 192 Rand per hour for 30 hours. If we do the calculation, our wages of factory foreman will then be 104,280 Rand. For the rental expense, rent expense includes the rent for March 2025. There was no increase in the rental for the financial year. Rental is apportioned between the departments in accordance with floor space. Factory will be 200 square meters, administrative 80 square meters, and sales division 120 square meters. So 200 plus 80 plus 120 gives us a total of 400 square meters. So for our factory overheads, it will be a ratio of 200 divided by 400. But remember, we also need to subtract the rent for March because it's a prepaid expense. So 169,000 must only include 12 months rental, and then we times it by 200 and divide by 400 because it's a proportion. And that then gives us an amount of 78,000 Rand. Depreciation for the factory overheads was given as 42,920 Rand. So our total factory overheads will then be 428,800 Rand. 4.5.2. Calculate the direct material cost on 28 February 2025. We will always start with our formula, which is our opening stock plus our net purchases. Net purchases means if there's any returns, we'll minus returns. We'll add our carriage, and we'll minus our closing stock. So if we go back to the information, our opening stock for direct materials is 195,000. Our purchases is 710,000 Rand. And then additional information 3A, the bookkeeper forgot to record an invoice of 112,500 Rand for raw materials. Trade discount of 20% was received on this purchase. So that means we only paid 80% of the invoice. So 112,500 times 80% gives you 90,000 that will also form part of our purchases. And then we minus our closing stock of 121,000. If we then do this calculation, we get an answer of 900,000 Rand as our direct material cost. 4.5.3, calculate the direct labor cost on 28 February 2025. Okay, so to do this calculation, we have to calculate the gross wages plus the employer's contribution. Now remember, your gross wage is your net wage plus your deductions. So it's your wage before deductions. If we go back to information 3, number C, the net wages is 720,000 and the total deductions is 161,000. So we'll add those two amounts together, plus the employer's contribution is given as 74,000. So the direct labor cost will then be 955,000 Rand. Exercise 4.6. The information relates to brick manufacturers. Required. 4.6.1. Prepare the statement of comprehensive income for the year ending 28 February 2025. Information 1. extract from the post-adjustment trial balance, balance sheet account section, finished goods inventory, work in progress inventory, from your nominal account section, revenue, debtors allowances, direct material costs, direct labor costs, factory overheads, administrative costs, and sales and distribution costs. 4.6.1, prepare the statements of comprehensive income on 28 February 2025. We are going to start with our revenue. Remember, it's the net revenue, so it's 83,000 minus our debtors allowances of 3,000 to give you 80,000 rand. Our cost of sales, our finished goods at the beginning of the year is given as 24,000 rand. For the finished goods manufactured during the year, we're basically going to do a production cost statement calculation in brackets. So we're going to start with our work in progress stock at the beginning of the year. We're going to add our direct material costs, our direct labor costs, and our factory overhead costs, and we're going to minus our work in progress stock at the end of the year. So it's 6,000 plus 12,000 plus 8,000 plus 14,000 minus our 5,000. And that then gives us an amount of 35,000 rand. Our finished goods at the end of the year is given as 9,000 rand, which we subtract. So our cost of sales will then be 24,000 plus 35,000 minus 9,000. And that gives you an amount of 50,000 rand. So our gross profit will be 80,000 minus 50,000, which is 30,000 rand. We then also consider administrative costs, and the amount was given as 6,500 rand. And sales and distribution costs of 1,500 rand. These are expenses, so we subtract it from our gross profit. So our net profit will then be 22,000 rand. Exercise 4.7. You are provided with information relating to John manufacturers. Required. 4.7.1. Calculate the value of raw materials on hand on 28 February 2025 using the weighted average method. 4.7.2. Calculate the value of the direct material issued to production. 4.7.3. Prepare the notes to factory overheads. And 4.7.4. Prepare the production cost statement for the year ending 28 February 2025. Information. Number 1. Inventory on hand for both years, indirect materials and finished goods inventory, and for work in progress inventory, only the beginning year figures given. Information 2, direct materials in units and in the rand value for our inventory at the beginning of the year, all our purchases, our total available for production, and our inventory on hand 28 February 2025. At the beginning of the year we need to calculate. Then information 3, other costs, direct labor costs, factory overheads, sales and distribution costs of 16% of revenue, administration costs, revenue, and cost of finished goods sold. Number 4, the following lists will be considered. 4.1, indirect materials. Indirect materials purchased during the year amounts to 260,000 rand. At year end, it was found that indirect materials with a value of 1,750 rand was stolen in the factory. The material was insured and insurance will pay out 1,130 rand in March 2025. No entries have been made with regard to the theft. The net loss due to theft must be treated as an administrative cost. Indirect materials used is apportioned between factory administration and sales and distribution sections in the ratio 1:1:3. 4.2. The monthly insurance increase was 10% on 1 January 2025. The yearly insurance paid amounts totaling 124,992 rand, which include the insurance that had been prepaid for March and April 2025. Insurance of R59,520 is allocated to the sales and distribution section and R7,440 to the administration. 4.3. Salary and wage expenses have not yet been considered. Direct labour factory, gross wages, deductions and contributions for medical aid and UIF. Calculate the value of raw materials on hand on 28 February 2025 by using the weighted average method. So firstly, the formula that we're going to use is our opening balance plus our purchases in rand value times by the units of raw materials on hand at the end of the year, divide by the opening plus purchased units. Okay, so if we go back to the question, our opening balance for inventory for raw materials is 55,000 Rand, and we purchased 1,135,000 Rand. Our units is 500 units at the beginning of the year, plus 9,020 units during the year. We times that by 560 units, which is our units at the end of the year on hand, and then we get an amount. If we say 1,190,000 Rand, divide by 9,520 units, we then get 70,000 Rand. 4.7.2. Calculate the value of the direct materials issued to production. So we're going to start with our opening balance plus our purchases minus our closing balance. And if we do the calculation, it was 55,000 Rand plus 1,135,000, which is our purchases, and then we minus the 70,000 Rand, which was just calculated in 4.7.1 to get 1,120,000 Rand. 4.7.3. Prepare the notes for factory overheads. Our provisional factory overheads is 616,000 Rand, 280 given, and now we need to calculate the indirect material cost. So we're going to start with our opening balance, we're going to add our purchases, we're going to minus our closing balance. We go to information 1, 2 and 3 to get these figures. So our opening balance will be 4,500. We purchased 260,000 Rands of indirect materials, and our closing balance is 2,730. Then if we go to information 4.1 as well, at the year end it was 1,750 Rand that was stolen, so we need to minus this amount. And also the distribution for factory admin and sales is in the ratio of 1 to 1 to 3. So the part that goes to the factory will be 1 out of 5. Then we get 50,604 Rand as our indirect material cost. For insurance, if we go back, they say the monthly insurance increased with 10% on 1 January 2025. The yearly insurance paid amounts totaling 124,992 Rand, which includes the insurance that has been prepaid for March and April. So in other words, insurance has been paid for March and April as well, so in other words for 14 months, and it increased by 10% from the 1st of January. So firstly, we have to derive an equation to calculate our insurance amount per month. So 10 months before the increase plus 4 months with an increase of 10% will give you 124,992. If you then calculate X, you get 8,680 Rand. Okay, the increased amount will then be 8,680 times 1.1 because it went up by 10%, and we paid that amount prepaid for 2 months, for March and April. So 19,096 Rand is then a prepaid expense for insurance that needs to be subtracted. So to calculate the insurance amount, we start with 124,992 Rand given. We minus our prepaid of 19,096 Rand. And then the question also said that 59,520 Rand is to be allocated to sales and distribution and 7,440 to administration. So these two amounts mustn't form part of our insurance because it's only the factory insurance that we need to calculate. So if we minus those amounts, we then get an answer of 38,936 Rand. And that gives us a subtotal for our factory overheads is 705,820 Rand. 4.7.4, prepare the production cost statement for the year ending 28 February 2025. Show all calculations in brackets. So our direct material cost that we've calculated is 1,120,000, and our factory overheads is 705,820. The direct labor costs, we are going to go to information 3. Our direct labor cost is 467,720 Rand given. And then if we go to 4.3, salaries and wages expense have not yet been considered. So then we need to consider the gross wages of 312,850 plus the contributions, your medical aid 7,200 and your UIF of 2,428. If we add all of those amounts together, then our direct labor costs will be 790,000 Rand. So our primary costs will be our direct material costs plus our direct labor costs added together, and that gives you 1,910,000 Rand. So our production cost during the year will be our primary cost plus our factory overhead costs added together, and that gives you 2,615,820. Our work in progress inventory at the beginning of the year is given as 65,050 Rand. So our total production cost will then be 2,680,870. Our work in progress inventory at the end of the year will be our balancing figure. So we first need to calculate the production cost of finished goods. Again, you start with a basic calculation. So if we go back to information 1, our finished goods inventory opening balance is 101,450. From information 3, we purchased 2,512,950 Rand, and then we minus our closing of 80,500. And if we do all of that, then we get an answer of 2,533,900 Rand as our production cost of finished goods. So our work in progress inventory is our balancing figure. We work backwards. So we say 2,533,900 and we minus our total production cost of 2,680,870. You then get a balancing figure of 146,970.